I want to welcome everybody to our continuing series of webinars in which we discuss the Inner Circle advisory service, the various strategies that we use and trade selection process. And it's also a venue to answer any questions you may have about the advisory service. So today we're going to focus on our trade selection process that we use to select stocks and options. And when I am selecting a stock to purchase a stock or to purchase a call option on a stock, I go through a screening process that starts with fundamental screening, and I'll take a look at a company's growth in their equity, their stockholders' equity, and I found that to be a great indicator of growth for a company if they're growing their stockholders' equity at a fast pace. And I also like to take a look at the growth rate in retained earnings, and this is also a great way to measure a company and compare it against other companies. And the retained earnings will include the retained earnings actually excludes one-time charges and write-offs, so that you get a really true picture of the earnings growth of a company by looking at retained earnings. And then I like to confirm the growth in equity and retained earnings by revenue growth. And what I'm going to do is set up another webinar where we'll go into this fundamental screening in detail. And so once I find a company that has a strong growth rate, then I look at the technical side, and we will select trades using 3 steps on the technical side. First, we want to use trend following systems to determine the price trend. And then step 2 of our trade selection is to confirm the price trend. And step 3 is we want to use the Keltner channels to determine an entry point for our trade, whether it be a stock or an option. And this trade selection process has been working real well for us this year. And I'm displaying the current profit results, open trade profit results for the stock portfolio. And I use the fundamental screening and the trade selection process to select stocks for the stock portfolio. And we currently have a $154,000 open trade profit and an average return of 72%. And here's a snapshot of the current option portfolio, and the option portfolio has a current open trade profit of over $82,000 and an average return of 102%. So both of these portfolios are outperforming the major stock indexes. The S&P index as of today, second to last trading day of the year, so it's been almost a whole year. And as of today, the S&P is just about flat on the year. So by using this trade selection process to find the companies with the best fundamentals and also that have strong technical indicators, allows us to far outperform the major stock indexes. So as evidenced by the current open trade profit results for the option portfolio and stock portfolio. And in terms of real-time results, I've been using this high accuracy trade selection over the past 4 years, where we've seen a severe bear market, a lot of financial turmoil throughout the world, unstable economies, high unemployment, And despite these difficult market conditions, this trade selection process has produced over $4.4 million in actual profits, and the average return has been 58%. Average days in the trade's been 76 days, so the annualized return's been about 282%, and about 95% of the trades are winning trades. So I publish a PDF with these trade results just so everybody can take a look and see that you really can be profitable despite these difficult market conditions that we've been experiencing over the last 3 or 4 years. So let's talk about the technical side of the trade selection. Step one, of course, is to determine the price trend, and we use actually three trend following systems to determine the price trend. We use the 50 and 100-day EMA averages for the intermediate term trend. We use the major trend system for the longer term trend, and for the shorter term trend, we use the MACD, the MACD. So we use three different trend following systems depending on our time horizon. And step one is to determine the price trend. And if the price trend is up using our trend following systems, then we want to buy stocks and buy call options. And if the price trend is down, we want to sell stocks and buy put options. And we do have short positions in the stock portfolio and the option portfolio, and we'll talk about that too. So we use the same trend following systems to take both long and short trades. Okay, and the basic concept behind the trend following is we want to buy stocks if the buying pressure is exceeding the selling pressure, and we want to sell stocks if the selling pressure exceeds the buying pressure. So we were able to actually measure this buying pressure and selling pressure using moving averages. And here's a snapshot of a daily price chart. This is for Apple. And these vertical lines represent daily price movement of Apple stock. And this is over a several week period. It looks like about a 5-week period. And by using price charts, you can see, just glancing at this, that in general, Apple's in a price uptrend because the price chart is showing a continual price uptrend for Apple stock over this particular time period. And here's another snapshot of the daily price movement of Apple stock. And again, these vertical lines represent the daily price movement of the stock. The top of the line, of course, would be the high for the day, and the bottom of the line is the low for the day. The left horizontal line is where the stock opened, and the right horizontal line is where the stock closed. So this is a little bit longer time frame than the 5-week period that we just looked at. And here's another price chart. Now this one includes this time period here where we see a lot of price movement, but the price actually hasn't changed that much over this several month period. So this time period is included right here in this longer term chart. And you can see by using these price charts, you can see that the overall trend for Apple stock has been up, as the price bars tell us. So this is a great way of just instantly telling whether the stock is in a price uptrend or a downtrend, and whether it should be bought or sold short. And I like to use exponential moving averages for the intermediate term trend, price trend. And the actual system that we use is we compare the 50-day exponential moving average to the 100-day exponential moving average. And if the 50-day, which is the shorter term moving average, is above the 100-day exponential moving average, then that stock is on a buy. And if the shorter term 50-day exponential moving average is below the 100-day, then that stock is on a sell. So our basic system is to look at a price chart and just see where the 50-day EMA is in relation to the 100-day EMA. And here's a price chart for Apple, and the 50-day EMA is depicted here by this blue line, and the 100-day EMA is depicted by the red line. And we can see in April, this was April of 2009, the blue line, which is the 50-day EMA, the shorter term, it actually crossed above this 100-day EMA. So Apple became a buy right here when the 50-day crossed above the 100-day. And we can see that the 50-day remained above the 100-day. And as long as the 50-day is above the 100-day, this system is on a buy signal. And I'll actually enter trades after the buy signal occurred if I use the trend confirmation indicators that we'll talk about shortly. So it's okay to enter a trade after the buy signal has been issued, sometimes as many as months or years after, as long as we follow the trend confirmation indicators and we can still confirm that price trend, then we can buy the stock or a call option after the buy signal actually occurs. Here's another example. Again, the 50-day EMA is the blue line, and the red line is the 100-day EMA. This is for McDonald's. We have both stock and option positions in McDonald's, and you can see the 50-day has remained above the 100-day EMA, indicating a buy signal for McDonald's stock. Here's another price chart for Mastercard, the credit card company, and we also have option and stock positions with Mastercard. And again, you can see that 50-day EMA blue line above the 100-day EMA for an extended period here. So it's been in a price uptrend here for a while. And again, as long as that 50-day remains above the 100-day, and we can confirm that with our price trend confirmation indicators, then we can buy the stock or call option again after the buy signal was issued. So I've been using these basic trend following systems for 26 years, actually 27 years now. And when I first started out, I experimented with several different things, but I found that the trend following was the best overall system to use as a new trader. And I started out with a $4,600 trading account, and within my first 2 years, I had over $460,000 in profits, and that was I was able to generate those profits based on these trend following systems that I'm showing you now. Okay, here's a indication of a sell signal for the 50 and 100-day EMA. This is for Merck, and we can see in this time frame, this was 2008, the 50-day EMA crossed below the 100-day EMA right here. So when that occurred, then Merck went on a sell signal, and we can see that the 50-day EMA remained below the 100-day EMA, so it remained on a sell signal. So you can see that if you were holding Merck stock and you use this to exit the stock once this 50-day crossed below the 100-day, you can see you would have saved yourself a lot of pain by simply following this trend following system, rather than try to predict if Merck stock was going to bottom out and start back up again. So it's better, I think, to simply follow these systems, because you don't know how long this downtrend's going to persist, and you don't know how much the stock's going to fall. So until you get the 50-day EMA crossing above the 100-day EMA, it's better to stay out of the stock. And you can see it can save you from horrendous losses simply by exiting a stock or a call option when that 50-day EMA drops below the 100-day EMA. And here's the 50 and 100-day EMA for European stock index, and you can see the 50-day crossed below the 100-day EMA in July of this year. So we actually have a short position in this index, because you can see it's clearly on a sell signal, and the 50-day has remained below the 100-day EMA. So to try to hedge some of our long positions in our stock and option portfolios, we've been taking short positions either by purchasing a short ETF or by purchasing a put option on these various indexes that are in bear markets right now. So here's an example of a sell signal for the EMA that we acted on, and we have a short position in this European index. And you can see that, again, here's another sell signal. This is for Sirius satellite radio, and you can see once it goes into a downtrend and that 50-day EMA is below the 100-day EMA, it's better to just either stay out of the stock or maintain your short position until it reverses, because, again, you don't know how long this downtrend is going to last. So it's best to just simply follow the system. And here's the type of trades we take if the EMA system is on a buy. Then we want to purchase stocks and ETFs, purchase call options and bullish option spreads. And if the EMA system is on a sell signal, then we want to purchase put options, bearish option spreads, and then purchase bearish ETFs. So we do have put options. We did purchase put options on some weaker international stock markets that are in a bear mode right now. So we have purchased put options, and we've purchased bearish ETFs. And these three types of bearish trades are what I call limited risk strategies. In other words, if you purchase a put option or you purchase a bearish option spread or purchase a bearish ETF, your risk is limited to your initial investment. That's not the same as if you short an ETF or short the stock. If you short a stock, then your risk is unlimited. So we like to stick to these three types of bearish trades. That way we limit our risk in a short position. And I did some historical testing of the 50-day, 100-day EMA system over a 24-year period for a wide variety of stocks, growth stocks, value stocks, small cap, mid cap, large cap. And over that 24-year period, what I did is I tested the profitability of purchasing 100 shares of each one of these stocks. And to purchase 100 shares in this list of stocks here, initially it would have cost $8,204. And over the 24-year period, that initial $8,200 investment produced over $210,000 in profits. And because this is a mechanical system, you can do historical testing based on the position of the 50-day EMA in relation to the 100-day EMA. So this is historical results based on the system, the buy and sell signals that the system issued. And over that 24-year period, it produced a 2,567% return. Now, it's easy to download this 50, 100-day EMA lines from stockcharts.com, and you simply type in the symbol, and then under periods, you would select daily, and then the range, you could select 1 year or 2 years. And the overlays would be the exponential moving average 50, exponential moving average 100, and then click update, and then you'll get a price chart with the 50 and 100-day EMA overlaid over the daily price movement of the stock. And here's an example for Apple. This is a 1-year price chart for Apple stock with the 50-day EMA, which in Stock Charts platform is this blue line, and the 100-day EMA is the red line. So it's easy to download these moving averages from stockcharts.com. So now let's talk about the major trend system. This is a long-term system, and I found through experience it's very valuable. Check this, especially if you want to take a short position, because you don't want to take a short position in a stock using a shorter term moving average, because a lot of times you could get whipsawed when it reverses back and forth. So I like to confirm the price downtrend before I take a short position by using this major trend system. So it's very useful for that purpose. With the major trend system, we take a look at the 1-month price of a stock in relation to its 20-month exponential moving average. And the stock will be on a buy signal if that 1-month price, which is the shorter term period, is above the 20-month EMA. And a stock will be on a sell signal if the 1-month price is below the 20-month EMA. And here's what that looks like. This is an example of a sell signal for the S&P 500 index. And this line right here is the 1-month price. And you can download this 1-month price and the 20-month EMA from stockcharts.com with their basic subscription. And this line here is the 1-month price, and the blue line is the 20-month EMA. So as long as the 1-month price is above the 20-month EMA, that stock, or in this case the index, is on a buy signal. And we can see from 2003 up until about December of 2007, the S&P was on a buy signal. So you caught this bull market here. But then once the 1-month price dropped below the 20-month EMA right here, I circled this sell signal at the end of 2007. At that point, then the S&P was on a major trend sell signal. And of course, exiting up here around the 1400 area in the S&P would have saved you a lot of pain when the S&P declined this sharply over this really short period of time. You can see this sharp decline. So again, if you simply follow these trend following systems, it's much better than trying to predict, the future price movement of a stock or an index. And all the way down here, the analysts were saying it's going to bottom, and of course it didn't. And you really had to exit stocks at this point once this major trend system went on a sell signal. And here's a longer term snapshot of the S&P This is over a 20-year period, and you can see in the 1990s here that it caught most of this up move, almost all of it, with this the 1-month price here being above the 20-month EMA. So this worked real well in the 90s. It kept you bullish for the most part. Then in 2001, it went short, and of course that was the start of a bear market, and it stayed short until 2003, when again it went bullish again, and then stayed bullish for most of that bull market from 2003 to the end of 2007. So this has been working pretty well in depicting the major trend, in this case, of the S&P 500 index. And here's a 1-month, 20-month chart for McDonald's, and again, this line here is the 1-month price, and the blue line is the 20-month price. And we can see that the 1-month price is above the 20-month EMA, so McDonald's is on a buy signal. So we actually have this in our stock and option portfolios. We have McDonald's stock. Here's another example. This is for Chipotle Mexican Grill, and we can see the 1-month price crossed above the 20-month EMA blue line here, which signaled a buy signal for Chipotle, and we have option and stock positions in Chipotle also. Now here's an example of a market. This is for the Europe, Australia, Far East index, and you can see the 1-month price drop below the 20-month EMA, indicating a sell signal right here. This was in August of this year, and we do have a short position in the EFA. We have a put option, and we also have a short ETF. So this is an example of a market that we're currently short based on the major trend system. And just like the 50 and 100-day EMA, the major trend system is also a mechanical system, so that allows me to do historical testing. And what I did is I tested this on a diversified portfolio of these stocks listed here: construction, computers, agricultural, steel, oil and gas, etc. So I took stocks from 8 different industries and did historical testing using the 1-month price and the 20-month EMA. And you can see over the 10-year period, a $10,000 investment grew to $608,000. So this performed very well. Now, of course, this, with the major trend system, we're also including the short side of these trades. In other words, if there's a sell signal, we're calculating the profits on the short positions also. So that's why over this 10-year period, this system was able to produce such big profits, is because it also profits from the short side. So $10,000 produced, a $10,000 investment produced a $608,000 profit, which is over 6,000% return. So it's performed very well. Here's a graph of that profit from that diversified portfolio of stocks. And here's some of the individual stocks in that portfolio and how they perform. This is for the precision cast parts. Apple, $10,000 investment in Apple produced a $933,000 profit. So, and again, you know, some of this is due to the profits from short positions with the major trend system. Foster Wheeler, Cliffs Natural, $10,000 investment in Cliffs Natural produced an $829,000 profit over that 10-year period, 8,200% return, and no losing trades. So historical results for the major trend system are very good and indicate that it performs pretty well. And keep in mind there were some bear markets in this 10-year period, so performs well even with bear markets in the testing period. So the second part of our trade selection is finding the best profit opportunities, and this is step 2 in our 3-step process. Step 1, of course, is to determine the price trend, whether it's up or down. That way we know whether we want to take a long or short position. Step 2 is we want to confirm that price trend, whether it's an up price trend or a down price trend. And then step 3 is to select an entry point using the Keltner channels. So let's look at step 2 a little bit in a little bit more detail here. And step 2 is, again, to confirm the price trend. And we use several confirmation indicators, on balance volume. I like to also use the new 52-week high list, and also leading industry group, and also the price level of the stock. And so these are 4 of the trend confirmation indicators that I like to use to confirm the price trend. And the on-balance volume, that can be downloaded from stockcharts.com. And with the on-balance volume indicator, when a stock closes up, the volume for that day is added to the on-balance volume line. And when a stock closes down, the volume from that day is subtracted from this on-balance volume line. So a cumulative total of these additions and subtractions form the on-balance volume line. And here's an example of the on-balance volume line in this lower chart right here for Riverbed Technology. And this is the OBV line right here. And generally, we just want to see this line sloping up to confirm a price uptrend in the daily price movement. So the sloping on-balance volume line confirms this price uptrend. And this is a great way to confirm the price uptrend. And here's a 50-day and 100-day EMA price chart for Apple stock, and you can see that the price trend is up. The moving averages are up. The 50-day EMA is above the 100-day EMA, indicating a buy signal. And we also have an upsloping on-balance volume line, which confirms this price uptrend. And the numerical value of the on-balance volume line is not that important. What we're really looking for is just to see this line sloping up to confirm the price trend. Here's an example for McDonald's stock. I took a snapshot of that today, and this is the 50-day EMA, the blue line, and you can see again it's above the 100-day EMA, indicating a price uptrend, and the on-balance volume line for McDonald's is also sloping up, confirming this price uptrend. And again, this is one of the stocks that we have in both the stock portfolio, and we also have options on McDonald's. So an upsloping on-balance volume line indicates that volume is heavier on days that a stock closes up, volume is lighter on days a stock closes down, and this indicates the buying pressure is exceeding the selling pressure, and this volume can help sustain the price uptrend. And another indicator we use is the new 52-week high list, and this is actually a great place to start your trade selection, is to simply look at this list every day and take a look at the stocks that are making a new 52-week high. And stocks that are making a new 52-week high, they tend to stay in a price uptrend, and they're usually the best candidates out there. And if they're making a new 52-week high, that's a good indication that the stock is performing very strong, and this is a great list to start your trade selection process. So another great way to indicate or to confirm the price movement of a stock is to use the on-balance volume line, and also to see if it's making a series of new 52-week highs. And also, I like to look at the price level of the stock, and I found that stocks that are trading in the 70 to 80 point range usually continue upward until they reach 100. And if they get up to 100, then they usually get up to the 120 to 130 point range. So this is another way just to confirm, just simply based on the price itself, because very few stocks ever get up to these higher price levels. So if they're at these higher price levels, that's also a confirmation that the stock is most likely to continue their upward price movement. Very few stocks ever get into this price level between 70 or 80 or between 120 or 130. So that's another way to confirm the price trend. And using the trade selection process for Apple, first we determined that the price trend was up using the 50-day and 100-day EMA. Then we confirmed the price trend, and we saw that the on-balance volume line was sloping up. Apple stock was making a series of new 52-week highs. It's trading above that $70 price level, and it's also in a leading industry group, retail. So a lot of the stock's price movement can be traced to simply looking at the industry that the stock is in. So I like to look at industry groupings for stocks and then pick one stock out of each leading industry as a way to diversify my portfolio. And a great way to look at the relative performance of various industries is in Investors Business Daily. They have a list of industries, and they rank the industries based on relative strength. So I like to pick one stock out of each of the stronger industry groups when I'm selecting my portfolio. And then step 3 in our process is to use the Keltner channels to select an entry point. And we won't have time to go into that today, but that can be another topic for one of our upcoming webinars. So today we looked at the technical side of our trade selection, and then in an upcoming webinar we'll look at the fundamental indicators I mentioned. We'll look at those in detail and how to download those fundamental indicators. And then we'll also look into detail into the Keltner channels and how to select a good entry price for your trade. And that's also a very important step. That's step 3, selecting an entry price. So, well, that'll conclude our presentation for today. And Adrian, do we have any questions?
Yes, Chuck, we did have 2 or 3 questions in the chat section.
Okay. I can see those now, yeah. Okay, does Chuck intend to speak about the MACD, the MACD, and the MACD, as I mentioned earlier, is a shorter-term trend following system, and I found that this year, with these really volatile price swings and volatile markets, that sometimes the shorter-term trend systems can get whipsawed, and so I haven't been using the MACD as much as I have in the past, only because of the volatility in the markets. And I found that when markets are really volatile like they were this year, that it's better to use a longer-term system like the 50-day and 100-day EMA or the major trend system, because you get less whipsawed trades and you get better performance results. So I found that this year, because of the volatility, that I haven't been using the MACD or the MACD that much. Okay, it says all these trends are different depending on the period of time you're looking at them. What time periods are used to evaluate different trades? Are they always the same? And usually what I do is the time period will depend on if you want to see where, let's say you're looking at the 50 and 100-day EMA, we simply want to see where the 50-day EMA is in relation to the 100-day EMA. So it doesn't really matter that much on the time period, whether it's 1 month or several months or even several years. All you want to see is, as of today, the relationship between that 50-day and 100-day EMA. And the same thing for the major trend system. You just want to see where currently that 1 month price is in relation to 20-month EMA. So which time period you used, it doesn't really matter that much. And sometimes I'll use a year or two, maybe longer data, just to see at what point, you know, the last buy signal occurred or the last sell signal. So that if you want to see that buy signal or sell signal, you may have to go back 6 months, a year, even a couple of years. But for our purposes, we just want to see where that 50-day EMA is in relation to the 100-day EMA today, and same thing for the major trend system. Okay. Okay, it says, are the charts available somewhere like Chuck's website? No, the charts that we discussed today are all available from stockcharts.com, and all the charts are free except for the 1 month and 20-month EMA. You need the basic subscription to download that chart, and I believe the basic subscription last time I checked was about $15 a month. So all these charts are free except for that 1 month price and 20-month exponential moving average. Okay, here's a question from David. Would you define stockholders' equity? David, the stockholders' equity is essentially the net worth of a company, and it's calculated by subtracting the debt of a company from its assets. And if you subtract the debt from the assets, you come up with the equity or the net worth of the company. And I found that that's a great indicator, fundamental indicator for a company, because companies that are growing that stockholders' equity at a fast rate are usually the best, most successful companies, and it's a great way to measure the true growth of a company. So in the stockholders' equity, in an upcoming webinar, we'll go into that in detail. That's easy to download from Google Finance. Okay, and let's see, I think I have one more question here. To use a stop loss if the price is moving contrary to the 50, 100 day, so price is below both moving averages, even though the 50 is above the 100. And to answer that question, no, I use a stop loss for stocks, and it's not based on the 50 or 100 day. We simply will exit a stock trade if the stock drops 10 to 15% below our entry price, and that prevents that small loss from developing into a large loss, which can really hurt your portfolio. So to answer your question, the stop loss is based on your entry price, and we'll simply exit once if that price drops 10 to 15% below our entry price. So, okay, I think I've answered all the questions here, and I want to thank everybody for attending today, and I wish you happy holidays and a great new year going forward. And this is Chuck Hughes. I want to thank you for listening, and I wish you the best in investing success. Happy New Year, everybody.